And here's another look at the Toronto housing market. Will lower interest rates set it on fire once again? Interest rates go up, interest rates seem to be coming down. In this video, we'll take a look at what's going on in the Toronto housing scene. No need for formal business talk. We like to keep it simple. My name is John Carr, and I work with my partner, Rosalin Smith-Carr. Picture it like a dance between interest rates and home prices, shaping how people think about snagging a house. So, when interest rates take a nosedive, buying a house becomes a bit friendlier on the wallet. And who doesn't love a good buy, right? But here's the deal. When home buyers catch wind of these lower rates, some may hesitate, thinking that prices are about to drop as well. The idea is that if interest rates are down, it could signal a potential dip in home prices, making buyers pump the brakes, at least momentarily. However, it's worth noting that this line of thinking doesn't always pan out. In reality, when interest rates decrease, more often than not, home prices tend to rise shortly after that. This uptick is usually the result of increased demand, with more buyers willing to pay higher prices for homes they can now afford because of lower interest rates. It's a bit of a paradox, but in many cases, lower interest rates actually contribute to a surge in home prices. The truth is, very few things in the real estate market are straightforward and logical. And here comes the curveball. Once people get comfy with the idea of lower rates, they start grabbing homes like they're going out of style. That demand, along with the belief that homes are more within reach, can actually push prices back up. And at least in Toronto, that seems to be the case for the last 10 to 15 years. Like walking a tightrope. The Toronto housing market needs to find that sweet spot to balance these ups and downs. Now, predicting what's coming next, that's a tough nut to crack. TD Bank recently changed their outlook on how much home prices might dip, proving that even the experts can always see into the future. By the way, here's an interesting question. Did you know how many people correctly predicted the financial crisis of 2008, 2009? Drum roll. One. One person out of perhaps thousands. There's a lot in the mix, from economic factors to the ebb and flow of available homes. It's almost like trying to predict the weather. You might get close, but surprises are always lurking. As we wind down the year, it looks like the housing market is taking a bit of a breather. Some buyers might hold off on their house until the new year kicks in. This slowdown could be because of the usual seasonal trends or because people are curious. They're really wondering if interest rates will actually make a move downward. Looking forward, the TD Bank has a hunch that the Bank of Canada might swoop in next year and lower interest rates to keep things on an even keel. They're like the superheroes of the economy, trying to save the day. Plus, they're counting on more people making the move to Toronto, creating demand for homes and helping to even out the playing field. In a nutshell, the Toronto housing market is like a complex puzzle with interest rates, buyer sentiments, buyers and sellers' opinions all thrown in. Pinpointing exactly what's going to unfold is like trying to hit a bullseye blindfolded. Whether you're in the market to buy or sell, grasping this puzzle is crucial. It's all about adapting to the twists and turns of the market, and that's the real game changer in Toronto's real estate picture. All of that being said, we don't claim to know how this market will unfold. However, we always have our fingers on the pulse, monitoring the ebbs and flows, and are always willing and happy to share that information with you. Thank you for watching, and we'll see you next time.